The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. And what do we have going on here? Well, we've got a market on expiration, and we're kind of getting back up there. I think I wrote it in my newsletter this morning. Memory's the first thing that goes, they say. There was an 85% chance from options saying that the S&P would expire somewhere between 2385 and 2390 today. So we're getting pretty close to that, 2384 as we speak. Volume's actually pretty good for an expiration day, 2.15 billion shares as we start the day. It's not one of those kind of expirations. So I think we had a lot of what was supposed to happen in expiration actually go through yesterday. I wasn't looking for anything big out here. I was trying to hopefully find some opportunities. We got down to 2378. But just about everything looked like it was fairly locked up going into last night. So not a lot happening out there. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Anything else really happening? Well, there's about three stocks I want to talk about today. Amgen, Tiffany's, and Adobe. So we'll get into those. Pretty quiet day. There's some news going on out here. Want to get into a little bit of history. And this is a special little bit of history today. And a special thing I call Dave Runs Everything.
That it's all just a little bit of history repeating.
On this day in 1737, as more Irish come to the Atlantic, the feast day celebration slowly grew in popularity. So much so, in fact, that the first ever St. Patrick's Day parade was held in Boston this day in 1738. But many things that we believe about St. Patrick are made up out of whole cloth. First, St. Patrick was born in England, and yes, he was a Londoner, had nothing to do with the Irish. He came down and tried to bring Christianity to them several times and was thrown off the island. He was finally came back, and we kind of warmed to him a little bit. But he was supposedly to get rid of all the snakes in Ireland. Well, there were never any snakes in Ireland. The snakes that they talk about were kind of like a bunch of Branch Davidian whack job cultists that were in Ireland, and he ran them all off. And no one really remembered that the snakes he was talking about is a derogatory term of the time, in which they were called the cultists. They called them snakes because they actually worship snakes. And of course, the reason the clover leaf is so important, at least the three little bladed version of that, was because he kind of pushed that as the Holy Trinity in Christian religion, and won him a great deal of favor. He told them that God was smiling on him with the three bladed little bush. Is it a bush or a shrubbery? More things going on. If you're wondering why they wearing green now, it had nothing to do with anything. Literally went back into the late 1700s and 1800s, going to the Irish Rebellion when the Irish soldiers wore green because the British were wearing red. Nothing really big about it other than they could find lots of green dye. Chicago dyed the river green for the first time today in 1962. And a lot of people don't know where all the parades and everything came from here in the United States. They were small and regional, many places where they were predominantly Irish. But the real drink fest really started in 1986 with a huge marketing campaign that was wildly successful with Budweiser, and convinced them that drinking lots of beer on St. Patrick's Day were one in name. I just happened to be in one of the cities that was ground zero for this marketing push, and I'd been there for the St. Patrick's Day parade in 1985, and it was rather raucous. I went to go back and get my car the next morning after the one in 1986. I was there till like midnight or something. And I'm not kidding you. Before there was a lot of trash in the years before, but there was about 2 or 3 inches of aluminum cans that had just been trampled down to nothing. So I'm figuring Budweiser did pretty well. I think that was 1986. And since that day, they've been reaping the rewards of heavy drinking on this day. And of course, all started in 1937. But wasn't that? It was a feast where they just happened to have a little parade. And it's kind of funny where all this stuff actually starts. Of course, we're into the 108th consecutive trading day without decline of 1% or more. I'm almost ready to say America held hostage, but not so much. Other things going on there. Hedge fund industry is seeing more than just an outflow of investor cash. Numbers out over the last few days show funds actually shutting their doors in record numbers and also dropping their fees almost 50% in some cases to keep cash in their funds. It's showing just how hard it is to beat a wild market over the last couple of years. As we said, not a lot going on other than options look like they were pretty much locked up last night, and that we were looking at 23.85 to 23.90, and the bias was a little higher. So I was thinking that, and 85%, a pretty good chance of a range, and a very narrow range it is. I have a model that when you're fairly close is pretty accurate. When we're very far away, if the thing's, actually saying 40 or 50 points away, not so much. But when you're fairly close like this, it works pretty good. Like I said, volume's okay, not huge, but I would imagine that if we close at 23.85 or 23.90, it's well within the realm. But again, this morning saw a lot of people shorting the market and watching the tape, and just figured by the afternoon they'd be covering again. I just don't know if there are that many. When we come back, we're going to get into some of these charts on the big movers. Then we'll look at some others. We've got plenty of time today. Give me a call, 877-927-6648. We've had some great callers. Be one of those today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to start looking at some of these stocks out here that not quite feeling the love today. Some of them are. But to begin with, we've got Amgen. They had kind of a Lipitor-like drug to lower your cholesterol. The number came in at it helped like 20%. So it wasn't one of these things that really was a cure, just made it a little bit better. And they spent a lot of money on this drug, and of course now down on huge volume. Just surprisingly that they would drop something like this on expiration day. Generally, if they get the news, they kind of wait till after expiration Friday, unless maybe somebody knew something and they were afraid it was going to leak. Like maybe some congressional people knew that this thing wasn't going to do very good, and they were afraid people would start spouting about it. But this is not the only big company in biotech to have kind of light volume tops and rollovers. Celgene yesterday, the November 9th high was 127 with almost 23 million shares. You had on the 15th, we had a little less than 5 million, 4 million yesterday. Today, about 3.8 million so far. So again, not a real surprise that we've seen some kind of light juice. I would have liked to seen lighter volume from the January 26th low up into today's kind of little spike on Celgene to think we have it. It's got a little gap over the top of it, but there are a few of those stocks that are doing that. Breakfast at Tiffany's. Actually a fairly good breakfast, up $3.30 at 93.31. A little doji out here. I was kind of surprised looking at the numbers pre-market and the market's reaction to it. That may just be that this thing had a few too many shorts. As we've said before, once you get into the $90 range, the odds are pretty high that you go to 100. My guess is that this little bounce, if you don't see a big reversal on Monday, you can probably look at this thing drifting up to the $100 mark fairly soon. They're spending a lot of money going after millennials, who I was told live in people's basements, parents' basements, and don't have any money, don't drive cars, and all they do is play with their iPhones all day and say that they will resist. Other than that, I don't know why that would be such great news, but who knows? Apparently, their sales are okay, and I think that's all that matters. Maybe it's just something you have to say these days. We are going after millennials. Man, a lot of times people say that stuff, don't really mean it. And, of course, the big winner of the day is Adobe. Adobe had a nice earnings pop, and there was no signal this thing had broken the downtrend, but no real good signal that sales were probably as good as they have been in a while. They had kind of a real rough patch, and it was unclear whether that was just a blip in the downtrend. Oh, speaking of people speaking with forked tongues, remind me to get to WFC after this. I'll do it right after. Anyway, Adobe Systems, they've basically turned everything to a subscription model. It's working very good. If you're putting anything on YouTube, if you're doing a lot of internet-based video, all their tools are pretty much the de facto go-to stuff. And if they can get $1,500, a month for a lot of their suites, pretty good thing. Anyway, everything going well finally again. We go back here and look at this. Kind of had sideways movement for just and slightly up, but didn't like this last move off of the $90 to $111 move. But volume did shrink okay back to the December 2nd, the start of this rally, all the way up to today. It's hard to see how they're going to grow anymore. It just is their stuff, the de facto, and doesn't look like a lot's changing out here. iShares Mexico. Oh, I said I was going to do WFC. Charlie Munger, who is the second banana at Berkshire Hathaway, had one of the biggest whoppers in a long time. I always remember reading Mark Twain and his books, I think both in Huckleberry Finn and the other one about the young boys growing up on the Mississippi River. They talked about lives of a real stretcher and what they could get by with Aunt Paula. Well, this one kind of strained credulity in that he said this morning that he thought that all the problems with Wells Fargo were a mere blip for all the phony accounts. And, of course, what was interesting is that he said that, and then an hour later, the board's out basically saying that all the previous CEOs and all the other executives that were involved in all these shenanigans don't understand why this thing, someone's not in jail over it. But with all the phony accounts, they're going to have to give all that cash back in options cash, any money that they made, which is going to be about $18 billion, I think, from the article I read. But Charlie Munger just saying it was a blip on the radar was very interesting to me. He's the same guy that said options are sewage, and proceeded to make the largest options trading business in the United States. I think it's in Lincoln, Nebraska, isn't it? I think they're on that side of Omaha. I think it's over there. Someone told me. I think I saw a picture once of it. They've got like four blocks of buildings in Lincoln that are just devoted nothing but to sewage. If you listen to Charlie Munger, let's go back to EWW. Very quiet in the den. You can give me a call at 877-927-6648, or you can email me at path@tfnn.com, or post a message in the den, or all those things. iShares Mexico, been waiting for this thing to come back to the gap from the election, where they proverbially dropped the chalupa on the 9th of November. Did so with 17.6 million shares coming back into that gap. And you all know how I love for this thing to get smack dab in the middle of it. We got to $15.18 today. Volume fairly light, nothing compared to that volume down. But again, always hearing how it was the end of the world. Mexico was just going to go sliding into the Gulf because Trump was elected president. And here we are, not that far from where it was back in November. E is EPW. High crimes equal mere blips in businesses. Go Munger from John from Philadelphia. Anyway, we will be back after this short timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. To see if we've got any movement out here. 2384.11. They're up to 3 points in the S&P cash volume, 2.3 billion shares as we start the bottom of the hour. Looking at some stocks out here, you had a nice gap with a sign of strength in Easy Corp. They make a great deal of Let's just make sure I'm not dreaming or hallucinating once again, as I'm apt to do. Provides pawn loans in the United States, Mexico, and Canada. Company operates through 3 segments, U.S. pawn, Mexico pawn, and other international ones. Back to this thing where it actually kind of rallied going into, what was that? Midsummer of 2016. Nice gap up, 2.3 million shares. Down in here with light volume again. So this thing could be bottoming out over time. Just thought it was kind of interesting chart. Not a lot of stuff giving signals these days. So the ones that are kind of interesting. Was kind of curious about why, with gold being rather steady today, Harmony would have a leg down. But, you could almost make a case that this thing is in an ABC down if it wasn't a $2.50 stock. March 9th, 206 is the low. Volume's not all that exciting out here, but would be interesting to see whether or not you could test this low. What's always disturbed me about some of these gold miners has been the high volume lows that have not been tested. In this case, on Harmony, it's the December 15th low, $1.86, that had almost 18 million shares. I would feel a lot better about being in gold if that happened. Now, all gold stocks not being equal, but this has had some fairly strong energy, about 20 and maybe 15% more energy off that February 16th high to the March 9th low. So would not surprise me at all to see that this 206 at least gets retested, and preferably, even if you want to make money tomorrow, preferably you'd like to see this December 15th $1.86 low tested with a light volume to kind of get a better and more bullish setup on that particular one. JB Hunt, not much going on in that. See you then, Gemini. PBR, I want to see how this one was doing. A little bit of a pullback out here today, but Petrobras has been bouncing around some recent lows. Question on this one is, again, would it come out and test the previous low? You've gone through, you can look at it 2 ways. The November 14th low at $9.14 had 48 million shares, but you also had an untested low from December 27th at $8.82. Now, the only reason I bring this up is energy has been very strong off the highs in Petrobras. Not only that, but there are huge amounts of problems in South America right now. Posted in the Den earlier in the day that they're arresting bakers in Venezuela because, of course, communism and socialism works so well that everybody's getting ready to starve down there. But things are probably why Brazil has a lot of exports. Things have not gone well there and seem to be kind of in a little bit more of a spiral down also. I don't know if this is so much around the price of crude as is the long-term viability of Brazil if they don't get their act together politically. Anyway, down on what will probably be at least decent volume today. And the question is, at 872, does this thing finally bottom? It's going to need a lot less volume than 23 million shares, I suspect. You got about 19 million today, so you're already way into that candle. And the question is that a feature of crude, or is that a feature of Brazil? I think that maybe it's 50-50. Anyway, pretty interesting. We have Ron in Denver. How you doing, Ron?
Hello there, David. How are you? I just wanted to let you know I bought some puts here last week on AKAO, a biotech stock that brought out results of their phase 3 testing, and I thought it was a lot of verbal garbage covering up that it's not. That it's they got a long ways to go to prove that drug, and it's moved up so much. And I just thought, if you look at the chart on it, where do you is that? How does that look to you?
Where are you in Where are you in? At what price
I'm
point?
only just in the last 23 and a quarter. Just a,
So you're kind of flat
short.
on the. You're basically flat on the trade or so.
Yeah, I'm
Close.
ahead about 50 cents or so.
Yeah. The biggest problem I would have is this thing's probably looks like about $19.
Okay.
And, we've got a gap at 18. You've got a little ridge back here on the 19th of January that's at 1894. That kind of 19 and a quarter kind of looks like where this could come back to. You had your big sign of strength back on the 12th of December. That's never come back and been retested. So you got 19 and a quarter where it could come back to. And, if I was ever playing this, I would have been playing it with the thought that it comes back down to the $7 gap. But that would just been me. I mean, I would have had to have a abiding belief that it was going back down there. I don't see a lot that says it is, but I don't see a lot that says it isn't either. So
Yeah.
I don't know where you were.
Well,
I don't know where you were looking
yeah.
originally.
Well, I'm on a fundamental basis. This is their only drug, and I think it's bogus, and it's the only drug they got.
What does this drug do?
I'm trying to remember. Doggone it.
I'm looking at it.
I forgot, to be honest. It's combo. I just don't remember, to be honest. You'd think I'd remember.
Antibacterials to treat multi-drug resistance infections. And it's in phase 3. And see, I'm just looking through this real quick. Monoclonal antibodies against various targets. Okay.
Yeah,
San Francisco-based company.
Yeah.
The thing is, it's kind of is a little, overall, probably not bad. Did you ever look at trying to pick up the puts on this? Or do you just short the equity?
I did both, to be honest.
Okay.
I did both. I shorted the stock and I bought a put spread.
To me, the put spread would be better. If you already had both, I'd probably get rid of the equity and leave the put spread on.
Okay. I'll do that here. I'll do that. Okay.
Okay. I appreciate it.
Okay.
You want to talk more?
Thank you.
Okay. We're done then. I guess. We'll see you back on the opposite side of this break.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. A few stocks making some signals here that look fairly interesting. Tata Motors, kind of interesting deal. Of course, Indian-based company, so I haven't had enough time to really research what's happening in India, but I would be very interesting. On a chart basis, though, fairly nice-looking chart if you are bearish. This thing came down with a huge amount of energy on the 14th of February, almost 8 million shares. Got back into that today with about 2 million shares. So kind of interesting. Little pop down today on no volume, but not a lot of juice off the bottom. No juice the last few days out here. And if everything started turning in the third world, this would be kind of an interesting play. Some of the other stocks out here, I wanted to look at some of the ETFs. XLU, utility sector, off a bit. No volume today, so can't put a lot in that. XLV, now this one did break today and broke the uptrend, I can't even say it, up trend line a little bit. But no volume so far, just about 6 million shares compared to about 11 million shares the last couple of days. So you can say that this kind of did it. If you saw this thing once again go higher and close above a 3x3 displacement moving average and then close below it, I would be very interested in that probably being maybe a signal that we finally have seen some kind of high. A lot of discussion today about the new health care bill. And if I've listened to everybody in the media the last 2 days, it was dead. No chance it was going through. And then, of course, it passed in committee. It's got a long road ahead of it, but a lot of noise surprisingly around it. But this thing kind of gapped down today tells us that maybe that there is going to be some kind of deal in Congress over this. Anyway, let's take a look at some of the other ones out here. Again, you can call me at 877-927-6648. XLV, what else do we have? I want to look at some of these that I wanted to get back to that we talked about earlier in the week, and I haven't had a chance to look at. JB Hunt. Take a quick look. Let's get that off so we can see a little bit closer here. JB Hunt Transportation Services had a low with 2.4 million shares on January 20th at 93.33. Big move down. We're back into that with fairly light energy. energy did kind of increase on the way back in here, which means that you'd probably look for more of consolidation. But just 1.33 million shares on March 14th. Today, just 600,000 shares so far. So we're starting to see, it looks like maybe some of these companies starting to build out, pound out a low in some of these. So there may be a little bit more sector rotation going forward in the markets in the near future. I had somebody ask about Intuitive Surgical. Again, in this healthcare space, I don't see a lot of signals yet. I think we said that about the SOX. In fact, I'll look at that next. Just never really saw a great deal of weakness that I saw anyway, or signal that this thing's done. Now, again, we're back up into the highs in Intuitive Surgical. Not a lot of volume, about 226,000 shares so far. Let's see what the earnings date is on this. April 18th. So what do we got? About 3 weeks away. A lot of these things could hang out here at least until we get back into the earnings season. And that's probably one of the toughest things about being short right now. What else did we talk about? I think I just said I was going to look at one. International paper, looking at this one. I wanted to see how it did. It did go below its February 6th low, $50.60. It had 6 million and change for volume. Got underneath it, never got the volume. And this thing's kind of popped back in to this trading range. Now, no big signs of strength now that it's back in the trading range, but you've had kind of 2 days out here with a light volume. Today, just 1.4 million shares. But as long as this thing remains above $50.60 and remains kind of in a consolidation mode out here, I think you may have a little something. The worrisome part is the energy off this March 3rd high back into the March 14th low. But, it wasn't enough to say pull the trigger short. It's going to break the $50 level. Not really so far. Hertz, of course, been watching this thing kind of bakes out for a while, just kind of bouncing around, not a whole lot in that one. Now, one of the interesting things that I've been watching is a lot of these apparel companies having very light volume tests of the low. And again, energy wasn't extremely light on these pullbacks, but the volume in the lows hasn't been either. So we may start to pound out some lows in some of these apparel companies. The G3 Apparel Group, GIII, had a low on February 8th of $24.28 with 500,000 shares. It kind of can't back into that, but man, the volume's always been a couple 100,000 shares, for the most part, lower. It kind of got into it with a little bit more volume on the 6th of March, but it's just kind of gone sideways like that. Now today, you got about 584,000 shares. And again, this thing right now, if it closed, would be under that low. And I didn't buy it. Like I said, it wasn't that good looking. But it would be interesting if some of these things don't have a little rally and get back into these trading ranges. But you got a little more volume. This thing needs to kind of do or die from some of these right now. But, it hadn't been overwhelming. It's not like there's a million shares to the downside, but also interesting. EOG Resources. Again, this one's had a nice little bounce, like most of the energy stocks. Had come back, filled its gap, did so on lighter volume. Now, this one I probably wouldn't be buying just because it's so much into natural gas. But it had a nice bounce off of 92.91 the other day. On the 30th of November, it gapped up with 10.1 million shares. Back into it most of the time with less than half of that volume, but also this little bounce out here has been fairly light volume too. I think you might get one more chance at this thing at $93, maybe $93.50. And that's what I'd be looking for. What I do like about this is the nice light volume all the way from that December 12th high to the low that we saw on March 14th. If this thing got back down there again and volume continued to be very light, my thoughts on natural gas and how much this company has to do with it be gone. This may have found some kind of low. Again, not today, maybe next week. A lot of stocks kind of coming back down to these previous gaps up, and not a lot of energy so far. But I think we need a couple more days out here before that happens. Hey, Polar, like the mule or the goose? Nope. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And had an email here asking me to take a look at Tesla out here. Has anything traditionally changed? And the answer is no. Last 3 days, we're still averaging somewhere around just under 30% of all shares traded that were initiated with short positions. Now, this did come back into this gap up. So on a chart basis, not a bad looking chart out here. What you did do is come down with a lot of volume, but you did to 242 on February 27th. You did so on 11.4 million shares, but then you came back and retested that kind of low. Didn't go all the way through it, but man, the volume was low, 3.8, 3 million shares. And I had puts on this thing. I went ahead and covered them. I didn't like the way this thing had been working all the way back through that 242 low. You know, we had your nice bounce on the fact, well, on the news that they were only going to ask for $750 million. My guess is you're going to see that $750 million asked for a few more times. They're just going to do it in small bite-sized bits. But this company's going to end up with massive amounts of debt to build out a car manufacturing company. And I don't really continue to see or wonder when this market starts to fail. I think it goes back down to $40. That's probably the true enterprise value of Tesla. And the question is just when does it happen? And when it's perennially 30% short, where do you actually pick up one of these stocks? And it's kind of a tough question. 270, I think, is probably where this thing's going to pop. You might see that on Monday or Tuesday, a little bit of a push. And I mean, if there's no volume, I mean nothing, like 2 million shares, it's up there for a few minutes and the thing just reverses. That may be one of the best signals you can ever get on Tesla, although it may go back and retest the 287 high based on nothing but the whole belief that this thing will work out in about 10 years, because that's about how far and how strong the company would have to grow for 10 years to get to the stock price and it be just kind of an average forecast. So I don't know. You want to lend me, I don't know, whatever money they have. Now, how about $750 million? Because that's what they're kicking out this week. And I'll give you that back to you in 10 years, and you'll be flat. And not such quite a big idea. Other ones out here that we want to look at. We'll check the usual suspects here before the end of the show. We got a minute. Let's take a look at Facebook and see if there's anything going on. We talked about this yesterday. A lot of these 52-week highs keep making 52-week highs and then pulling back. This one went to 140.34 today and then kind of pulled back. But again, no big signals. Most of these things that are on an upswing, even if they pulled back, probably going to get one more push. My guess is that you'd want to short that fish hook part of it. You don't want to be betting on these things failing at any one time. They're either going to fail so fast that you're going to have a horrible short point. And what you're hoping for is a mild pullback and then a push back up on no volume and pulling the trigger there. I just don't see much in the way of risk reward yet. No signals, any of these things, and it just continues to be a waiting game if you are going to be short any of these. As I said, probably Wednesday, we're going to have options roll over Monday and Tuesday. Look for a little bit more volatility than we've seen the last few days. And then the market probably starting a trend again on Wednesday. At least that's what I'm looking at. In the meantime, sell when you can, not when you have to. We'll see you Monday. Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.